Our banking system is sound.
In the past 2 weeks, serious difficulties at a small number of banks have emerged.
These banks are safe.
All depositors' savings in the banking system are safe.
The banking system in the United States is sound and resilient.
Banking system is sound. Banking system is sound. Banking system is sound. Banking system is sound and resilient.
A rough week for the banking industry.
The collapse of Silicon Valley Bank, the second biggest bank collapse in U.S. history.
The Silicon Valley Bank collapse is the worst since 2008.
Social Security is structurally sound.
As president, I will not cut one penny from Social Security or Medicare.
There's an imminent disaster waiting. I mean, that's where we're headed.
2 balls, 2 strikes to Bryce Harper. Suarez delivers. Swing and a drive. Left field. It's deep. It's going. Yes! And it is gone. Yes! It is bedlam at the bank as Bryce Harper has put the Phillies on top.
Thank you for tuning in to podcast number 14 of Bogus Banks, Behemoth Bubbles, and Baseball Betting. I'm your host, Chase Goldman, and today is Friday, January 30th, 2026. It has been 94 days since Andrew Ross Sorkin, the CNBC spokesperson, Andrew Ross Sorkin rang the bell the morning of October the 28th, standing in front of a giant sign about a stock market crash. The following day, October 29th, all three major U.S. stock market indexes hit their all-time intraday highs. The all-time intraday high set on October 29th, and the NASDAQ 100 has not been breached to this day, 94 days later. Coincidence? I don't think so. We came within inches of breaching that all-time high this week. And here's where it gets a little bit, in my mind, like maybe not so coincidental. Andrew Ross Sorkin rang the bell on the 28th of October. The NASDAQ 100 index came within 65 ten-thousandths of a percent of breaching its all-time high on the 28th of January, but it just couldn't quite get there to that new all-time high. And what's happened since then? I've got a little bit of breathing room. We had about a 200-point down day on Thursday on the NASDAQ 100 index, and then we followed that up with about a 320-point drop today. So about a 2.5%. I've got about 2.4% of breathing room on this trade now that we did not have at the high on Wednesday. So today's Friday. We've already come down 2.5%. I think it's going to be straight down from here. I think they're done walking around. I think these people are going to get serious now. They're going to get serious with the boy. And if you don't know what I'm talking about when I say the boy, well, then you just probably haven't paid much attention to what's going on. So let's go back to the intraday high of October the 28th, October the 29th. So that high was 26,182.10 in the NASDAQ 100. Now, initially, I will admit, I was going to focus on the Dow. That didn't last very long at all. So then I said, okay, all right, I think the focus of humanity is on the S&P 500. It's got more assets under management than any of the other two indexes. So I'm going to go with that one. That one got breached on the day after Christmas, December 26th. And then I decided, well, you know what? I still think I've seen something. And the NASDAQ, I'd just kick myself forever. If I would have thrown in the towel on December 26th, knowing that the NASDAQ had not breached its all-time high, and, you know, this is an AI bubble. I mean, that's what everybody's calling it anyway. They were calling it an AI bubble long before Sorkin rang that bell on the October 28th. So I had to stay in the trade. So I'm with NASDAQ 100, and that's where I'm at. And I think maybe that, you know, that's where you see the advertising for the stock market. You see the Invesco QQQ ads all over the NFL, Major League Baseball. So that's where I'm going, and the trade is still alive 94 days later. So coincidence? No, I don't think so. I don't think so at all. I think I'm onto something. I think I'm going to make a lot of money on this trade. But you know, it's risky, but it is a limited risk. In other words, when it makes that new all-time high, I'm out of this trade. So I think my total risk on this trade is probably, I think I made the mistake of averaging down a little bit as it was moving in my favor, because it did drop 7.5% after October the 28th, and then it recovered through Wednesday, and now it looks like I think we're gonna head back down. But the markets are just, in my opinion, these markets are just as fake as a $3 bill. So, I mean, if anybody can ever explain this to me in logical terms that make good sense, then maybe I would come down off my high horse that these markets are completely just a fake video game. So the biggest smoking gun I can find that these markets are completely fake is what we saw in 2020 with the U.S. 10-year. Yields on the U.S. 10-year got down to like 0.5%. Let me put that in perspective. I'm going to loan you $10,000 today. 6 months from now, you're going to give me $25. And then 6 months from them, you're going to give me $25. And you're going to keep giving me $25 for 10 years. And then after 10 years, I'm going to get my money back. Now, this is right after the Fed said that they printed $4 trillion out of thin air. We saw yields come down to 0.5% in 2020. If anybody can come up with a logical explanation for how that makes sense, I'm all ears, because that sounds completely bogus and fake. And if that's fake, then what else is fake? Probably all the trading on the stock market. I'm still saying right now, you're going to see more actual real money changing hands on Monday Night Football than you will on the stock market on a Monday. That's what I believe. I think this thing is as fake as a $3 bill. And then this bitch slap they had on gold today, it came into the New York Open. Now, I've seen this a million times, and the gold bugs, at least they can understand where I'm coming from, because we have seen it 1,000 million times where, Shanghai opens at 9 o'clock at night, and then London opens up a few hours later, and then, by the time New York opens, London's open at the same time for a few hours. But what we'll see is one of these stupid, ridiculous government reports that move the market. It's usually the CPI, or it's non-farm payrolls, or some stupid it's always a government report that does that. It'll never be one of these, PMIs from some independent organization. It's always the official government report that moves these markets hundreds of points. And so you'll see that, and they'll use that as an excuse. And, you'll come into the morning back when gold was $1,900 an ounce, and we'd be up $20, $25 coming into that New York Open. And then shortly around the time that New York's COMEX opens, suddenly you look up and gold's down $25 an ounce. They bitch slapped us for $50 an ounce. I've seen it a million times if I've seen it once. I've only been a gold bug for 6 years. I'm relatively new to this. So it happened again today. Trump tweeted out at 6:51 a.m. that he was going to appoint Kevin Warsh as his Fed nomination for the Fed, chairman. So gold immediately just got bitch slapped, and we wound up closing down $500 an ounce on gold today. Unbelievable. It's fake. Everybody knows, all the gold bugs know that's fake, because, let's think about it. There were two Kevins. I think there was a Kevin Hassett and a Kevin Warsh. Those were the two guys that you go on Kalshi, and they were the two that everybody was betting on. They were the front runners. And now the story, okay, Trump tweeted out earlier this week that he wants rates at 1% or better, and then he appoints Warsh as his new chairman. You don't think that they had a conversation before this happened, saying, hey, look, this is where I want you to go if I nominate you? You don't think that happened? The markets are acting like he's the most hawkish Fed president ever. He's going to be another Paul Volcker. He's going to put us back on the freaking gold standard. He's going to be such a hawk. No, come on, that's a joke. And for gold to drop $300 an ounce on that, from where it was already down about $200 coming in from London. So, the markets are just, convince me that they're real. I promise you there's more money being bet on Monday Night Football every week than there is in the stock market on that very same Monday. I promise you. That is the story. That is the real, true story. I promise you. There is no way humanity is betting more money on the stock market than they are on Monday Night Football. I just don't buy it. I don't buy it at all. The number of people that I meet that don't even have a trading account, could care less about the stock market, it's got to be 95% of the people around me. It's amazing. So I wanted to point out one thing about these markets and how fake they are. I think I've gone over the 10-year with the 0.5% yield. Loan me $10,000 today, and I'll pay you $25 every 6 months. So you loan me $10,000 today, and I'll give you $50 over the next year, and you can't even take your wife out to Chili's and get a couple drinks with dinner. Can't even do that with $50. Really? $10,000? No. It just sounds, it doesn't pass the smell test. None of it does. None of the trading volume on IBM and all these stocks on the stock market, none of that shit passes the smell test. Period. I'm telling you. It's got to be fake. Any market you have where the price can move up and down by the minute, I'm saying all of those markets are fake. All of them are fake. All of them are fake. I think it's a video game. I think literally they told us in The Wizard of Oz how they do it. They've got a guy back behind the curtain who decides to move the price of IBM up a little or down a little. That's how it works. Somebody explain to me how a market maker makes money when he's the buyer of last resort. He's got to buy when the fraud has just been exposed and the stock is tumbling down from 100 to 0. He's got to be the guy to provide that liquidity, a market maker. Somebody tell me how market makers make money. I've never heard a coherent explanation for it in my entire life. Not one time have I ever heard how market makers can make money. So let's go over one other thing. I did reply to a tweet by Anthony Pompliano on Twitter earlier this week. And, he's trying to claim that inflation is 1.2%. Now, I do believe that when it comes to the MAGA crowd, Trump can do no wrong crowd, Trump is our God crowd. I do believe that they honestly think that he beat inflation because he said he did. He's beat inflation and we're good to go. We can cut rates back to 1%. Trump's got it under control. Trump's our man. If he can't do it, no one can. Trump, 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 Trump. Okay, well, on my last podcast, I went over my inflation tracking that I'm doing with Walmart now. So there's a Walmart by my house in Texas. I went there on December 1st, or roughly thereabouts, in 2024. I went back a year later. I photographed only items on those store shelves that I thought would be, number one, unchanged a year later, and number two, still on the shelves at Walmart a year later, so I can get a price comparison. So I want an apples to apples comparison. That's what I'm looking to do, as I want to get an apples to apples comparison, because when you start trying to compare homes, you can't compare a home or an apartment year over year. They have a year of wear and tear on them. Homes are very expensive to own. Everything breaks down. Roofs, fences, air conditioners, plumbing, all kinds of shit. Paint gets bad. I resurfaced my garage floor 12, 13 years ago. It was so bad I had to have it resurfaced again last year. So everything in a house has to be replaced over time, every square inch of it. You can't compare a home. You can't compare a new car. This year's model might have a backup cam that last year's model didn't have. And then, of course, the Bureau of Labor Statistics, who comes up with these government reports, they come back in and they say, hey, we did our studies, and yeah, this one has a backup cam. Last year's model didn't. So instead of this car retailing for $30,000, we need to take $1,000 off because of the backup cam. It's a $29,000, car this year if you're going to compare it to last. No, you cannot compare this year's model to last year's model. You can't compare electronics. You need to have something that's stable, that doesn't change. A can of WD-40, a bottle of Elmer's School Glue. So anyway, those prices were up 9.1% year over year. And so I replied back to Anthony Pompliano, and there was one thing that I was able to easily do, and that was go back to last year's credit card statement and this year's credit card statement. What instigated all this was I went to Cool Heads for Men, and I got a haircut. I took my dad up there. He's aging. He's got dementia. And so I paid for his haircut first, and he gets the child or senior rate. His after tax, his haircut was $38. Then I got mine. I paid for mine, and it was after tip and after tax, it was $50 and change. I've never paid $50 for a haircut in my life. So I went back and I looked at my credit card statement from a year ago. And guess what I paid a year ago at Cool Heads for Men? I paid $44 and change. So it went up 13%. I also noticed the discount tire. Last year I ordered all my tires for my business on TireRack.com. So this year I figured out that's way too much trouble. So we just went to Discount Tire to buy the tires. And so I can't compare the price of the tire, but I can compare the price of the installation of the tire. A year ago they were at $22. This year they're at $25. Again, that went up 13%. So I said, well, what would be interesting is what if we looked at all my monthly subscriptions? So I found them in all my credit card statements a year ago and then recently. Audible, Netflix, TF Metals Report, Club 4 Fitness, Peacock, and YouTube Premium. So Audible was the only one that didn't have a price increase. They were the same price. Netflix went from $16.77 a month to $19.47 a month, up 16.1%. TF Metals Report went from $14.99 a month to $19.95 a month, up 33.1%. Club 4 Fitness, they barely went up, but they did go up. They went from $30.13 to $31.12. 3.3%. Peacock up 37.5%. They went from $8.91 to $12.25. YouTube Premium went from $13.99 a month to $15.60, up 11.5%. And Pompliano is trying to claim that inflation is 1.2%. Are you out of your? I want some of what you've been taking, my friend Anthony, because that is just stoned. If you think that can represent reality, that ain't the world I'm living in. But apparently the bond investors, they believe the government's numbers. They don't go to Walmart. They don't subscribe to Peacock. They don't subscribe to Netflix. They don't have Audible. They don't have YouTube Premium. I don't know what they're doing, but they're not spending any money, or they wouldn't believe these government reports and move the markets based on them. The average price increase on those subscriptions was 16.9%. So I don't know what the real rate of inflation is. It's 9% at Walmart. It's 16% on my subscriptions, and it was about 13% on tire installations and haircuts. So how the hell do you come up with 2.7%? Well, the truth of the matter is there is no explanation. The markets are fake, guys. Admit it. These government reports shouldn't. Everybody knows they're bogus. Everybody. I mean, you could listen to 25 podcasts on YouTube that are about economics, and I guarantee you if you listen to 25 podcasts, you're going to hear at least 10 of them saying these government reports are not telling us the truth. They won't come right out and say it's all fake like I will, because most of those people that do those podcasts on YouTube, they're trying to sell something. They're trying to sell either a newsletter, or they're trying to get you to invest in their fund, or they're wanting to do personalized money management and financial advice. So they can't come up with stories like, hey, I think 9/11 was an inside job. They can't say that. I can, because I'm not trying to sell shit. I don't care if you listen to my podcast again. I got like 157 views on my last podcast. That's the most I've ever had. And I think it was because of the thumbnail. But yeah, the markets are complete. It's a video game, guys. It's a video game. It's like we're supposed to believe that the market's all just going to lose confidence in a certain thing, this AI bubble, because that was the weird thing that happened also on Wednesday, on the 28th. After hours, Microsoft reported and Meta reported. They both pretty much came in. They beat their stupid little fake number that the analysts lowballed them, and that's another thing that I want to talk about is the analyst upgrades. How can that move his stock price? Because nobody respects the analysts. The Wall Street analysts are complete idiots. I think they're still using $2,400 an ounce in their models to predict earnings estimates for the gold miners, even though the price of gold is more than double that. Who respects these clowns? Nobody. Nobody. But then when they come up and they upgrade a stock, holy shit, buy, stock's up 10% on an analyst upgrade. What? No, it makes no sense. That doesn't pass the smell test. The other thing about those analysts is you can't find them. You can't contact them. They don't have a Twitter page. They don't have anything. There is no way to even mock these assholes. You can't even mock them. And they're the only ones that get to answer the questions, or they get to ask the questions on the earnings calls for the giant corporations, the publicly traded companies. You and I can't answer. I tried one time on a company that was going bankrupt. I pressed the button to get in the queue. I was surprised I was even able to do that, but they damn sure wouldn't take my question. But all the analysts, if you're from Credit Suisse, which is now completely bankrupt, you get first priority in that queue, along with all the people from Deutsche Bank and Bank of America and all these. Oh God, it's such clown world. All of it. It's so fake. All so fake. Okay. So anyway, last thing before I this is a rant today, I guess. I'm a little emotional. I didn't like seeing gold get bitch slapped $500 an ounce today. I think it's down. I think from yesterday's high, I think it got up to almost like, what did it get up to? 56. I think it's down almost $800 an ounce from yesterday's high. Insane. So, yeah, the markets feel fake. I think it's because they are fake. And I'm betting on this trade. I think I've intercepted the little witch's spell, and I think I'm going to make a lot of money. I think these markets are going to head down lower next week. I think the markets are about to just what I was saying about Meta and Microsoft after they reported earnings on Wednesday, on the 28th. Very similar numbers. They both had a beat, and they both came in and said we're going to spend asinine amounts of capex on this stupid AI bubble. I think Microsoft said they're going to do about $150 billion in capex on AI this year, and I think Meta said they're going to do 115 to 135 billion. So between the two of them, almost 300 billion. And so what happened with that? Meta got rewarded. Their stock went up 10%. Microsoft got bitch slapped. Their stock went down 10%. Same capex plans either way. You know, that's the thing about the stock market. You invest in a company that winds up making money, but then you count on that management team to invest that money in something else and continue to make you even more and more money. Well, I can tell you right now, this AI bubble is just such a joke. The inference costs alone for OpenAI are landslides higher than what they're bringing in the door and what they'll probably ever bring in the door. I don't think they ever can become profitable. These queries are eating up so much energy. They just, and in these chips, you got to keep them current, because the newest and greatest chips, those are going to be the ones that can do the compute on lower energy costs. But then what's going to happen is these things are just probability machines. They're just going to calculate more and more probabilities to come up with more precise answers. So it's a never-ending goose chase of, this is not like software, where you write the software, you get your patent, you get your copyrights, and you sell the same freaking thing that costs you nothing over and over and over. It is not like that. AI is nothing like that. There are big costs associated with answering somebody's stupid question on a chatbot. That's a massive cost for them. I think I read where if you put in like a 100-word query, it's going to use up so much water to cool the chips. It's like a pint of water to cool the chips on a 100-word query with OpenAI or any of them, I guess. So, yeah, I mean, I just can't even believe they've made a bubble out of this. It's just so fake. Okay, so anyway, Microsoft goes up because they're going to spend all their investors' money. Or no, Microsoft went down because they were going to spend all their investors' money on AI data centers. And Meta says they're going to do the exact same thing, and their stock goes up. It's a video game, guys, and it doesn't have to make sense. It rarely does make sense. And this is the reason, because it's fake. It's a video game. It's a number on a screen. All right, so one last thing about this conspiracy trade that I want to point out. I did notice, I'm going to play you this clip here in just a second. I did notice when Oz Perlman was on the set at CNBC, and by the way, I had the date wrong in the last podcast. It was not on November the 19th. It was the morning of November the 18th, which, in my opinion, encodes 9/11 backwards even more so. So you've got 11, November, and then 1 plus 8 equals 9. That's an 11, 9. Reverse it, you have 9/11. 9/11 encoded backwards, right there you have it. I thought it was 11/19 on the last podcast, which I would still say that encodes 9/11 backwards. It's just one extra one, but I don't think that really matters. I don't think you got to be precision with these things. I'm seeing stuff that I think is there, and you know, the weird thing about this is I can already fast forward this. You know, if I'm right and I've intercepted their message, and this market does bottom on July the 6th, and that's the low. Well, until we get to that day, and if I'm right, I know my friends are going to think I'm completely insane, I'm completely crazy, that Chase Goldman is a nutcase. I know that's what they're thinking. Everybody's got to be thinking it right now. But if I wind up making millions and millions and millions of dollars on this trade, possibly tens of millions, because the thing about it, I figured it out. When you're short the stock, okay, let's say that QQQ drops 10%. Wow, okay, I've made 10% on my initial position, which is massive. Okay, now that's just like me putting that 10% cash money into my account. It's there and I can use it now as leverage to go even lower. So then what I can do is I can come back in and I can short more NASDAQ, more QQQ. And what I can do when I enter that position, I can buy a call that expires 9 months later in case they run this damn thing up 70% from a low. And I'm sure they will. Some random low will come along on this crash, and then they're going to run this son of a bitch up 50%, maybe 60 or 70. won't hit a new all-time high, but they're going to run this thing up massively in the middle of this whole crash to squeeze out all the shorts. But what I'm going to do is I'm going to go in there and I'm going to short 100 shares of NASDAQ, and I'm going to buy one married call to go with that. But I'm going to get some time on it. I'm probably going to buy 9 or 10 months of expiration on this. So that will cost me for 9 or 10 months because they just rape you on these options. But then as that stock continues to go down and that trade wins, now I've got even more capital to work with. And I think I could literally, if they're going to run this thing down 90% by July 6, 2027, I think I can make quite possibly tens of millions. I don't know. I mean, maybe I'm completely overestimating what the potential is here. But I think if you know the top of a huge crash, the date, just knowing the dates, the top and the bottom, just having that. I mean, if you know that in advance, and I think I do, I think you can make a lot of money, and I intend to. But will my friends, if I'm really curious to see what my friends say, if this damn thing bottoms out on July 6th, 7 plus 6 is 13. They don't put 13th floors on buildings because of superstitions, because of witchcraft. Okay. All right. So let's go back. I was listening to that Oz Perlman presentation on November the 18th. With Andrew Ross Sorkin and Joe Kernan. And Joe Kernan, I don't know. I don't watch enough CNBC to know if Joe Kernan's a little bit dumb. Maybe he just had to wake up so damn early to get to work. And I get that. If you're laying in bed and you're going to bed late and you've got to be up at 4 to make it into the studio by 6, I can see where like, oh my God, it's already 2 o'clock and I haven't fallen asleep. And then your mind starts freaking with you and you wind up with no sleep. So maybe that's what happened to Joe Kernan. But I'm going to play you this clip and I want to point something out right after I play it. I'll be right back.
Done spectacularly. Right, but how do you see what's going to happen? I like to say we throw out a date. We go into the future, gentlemen, month, day, and year. That has no meaning in the next decade. Month, day, and year. What year? Give me the year. What do you got?
The one that...
Yes.
2027?
2027, you see, is there a reason you picked it or no? Month and a day.
I'm July 6th.
July 6th, 2027. What do you think's going to happen on that day? I'm writing it down. 7:06.
The market will open and the market will close.
Okay, did you notice that? He says, pick a day in the next 10 years. And the first thing Conan says, you mean the one that... And then he says, to 2027. He sounds real dumb. And then he also brings up, what do you think will happen that day? The market will open and the market will close. And then in the rest of that little skit, they also were, after they got the date out there, they were like, well, gee, I wonder if it's a weekend or a weekday. We didn't look, blah, blah, blah. So I think Kernan was told in advance to pick 2027. Let's play that clip just one more time.
Done spectacularly.
Right, but how do you see what's going to happen? I like to say we throw out a date. We go into the future, gentlemen. Month, day, and year. That has no meaning in the next decade. Month, day, and year. What year? Give me the year. What do you got?
The one that...
Yes.
2027?
2027.
So you notice Joe Kernan says the one that... Okay, they've talked about this previously. This is not an authentic skit. Maybe Oz Perlman's just a fake magician. I don't know. But I still think they're casting a spell of some sort. But Kernan says the one that... So he was told to pick the year 2027 in advance. That's what I read into that. And then Andrew Ross Sorkin, when he recites the date, he says July 6th, and it's almost like he has to cut himself off, like he was about to say 2027. Because you know how you have that certain cadence, like, oh, we're going to do this on July 6th. We're going to do this on July 6th, 2027. So he says July 6th as if that cadence was there, like he was going to say the year at the end, but he didn't. I don't know. Maybe I'm reading too much into what Sorkin did, but certainly Kernan was told. He was told the one that, he sounds really dumb. But anyway, that's it for today's podcast. I'm pretty excited about this trade. I think it's going to go, and I think they're going to take the wealth from the boy, if you understand what I mean. I think that wealth's about to evaporate. We're about to get serious. So that's it for today's podcast. Thank you for listening.